Hey everybody, welcome back. Hope you're having a great day and thank you for taking the time to stop by. Hello Good Trades, or many of you may know me as Hello Good Game. I play a lot of Magic the Gathering on YouTube. Check out the channel, 50,000 subscribers. Number one player in the world. Did you know? But today we're talking GameStop, my favorite thing, only thing I love more than Magic the Gathering, right? So we're going to go over our daily price action, basically trading sideways. We're up 1%, big big money. Uh, but continuing to basically just bounce off our bottom trend line here, right? So um, we thought we were going to reclaim the 21 and the 50 the other day. We gave them both back. Um, and then, we're kind of talking about how we want to make sure that this order block holds. And then we're going to try to invalidate this order block up here, right? Try to turn a bearish order block into a bullish breaker block. And, we're just a few days away from earnings. Today was Friday. So 4 days, two of which are the weekend, right? So we're trading on Monday, trading on Tuesday. Tuesday after market close is when we'll see earnings here. So really nothing to talk about on the day. Current day volume. Oh, we'll have to go the 1 day here. Current day volume 11 million. Ooh, that's substantial, right? We see volume increasing, right? This is the highest volume day we've had in some time since really July 31st. So, quite a ways, right? All of August was low volume. And even that's, kind of an anomaly. We've not really had anything too aggressive there, right? Like just a couple days touching that. So, of course, we're into our earnings. You would expect volume to be up. We're at 2x our average, which is nice. But what we need to see is 20 million. What we need to see is 100 million volume day. That would be preferable. Bouncing off the order block, coming back up. So we'll see, how that pans out. The range here is so tight for, is this reversing or is this breaking down? Like we literally couldn't be in a tighter range right off the bottom trend line, right? We do have an ascending trend line here, which has been faithful to us. If it invalidates, I am assuming that this is strictly a manipulation leg that will distribute into. For those of you who don't know, I mean, I did a whole video on it, but go to Ethereum on the 1 day here. And then we have the exact same pattern, right? We have this accumulation leg. We have a manipulation leg down, which breaks support. Because, so if you're a trader here, and you're going long, you put your stop loss below the support. If you're a trader here and you're going short, you put your stop loss above the resistance. And then the market maker's like, haha, we're going to flush liquidity this way and then this way. Just what they do, man. House always wins. Because they get to see that, right? They know how the order book is stacked and, where it can be moved. So we get this manipulation leg with an immediate reclaim of key levels, and then we distribute up. So this was the 8th of May until the 20th of June, right? So like a long period of consolidation. And then we get like 1, 2, 3, 4 days, basically, maybe even 3 days, not a lot of time in that manipulation leg. And then we're right back into where we're consolidating or accumulating. But then once we break out of that, like if we move this down a little bit, once we break out, the rest is history, right? And we go on a extended run, which is great. So this is the pattern that we're looking to fulfill here, right? Accumulation, manipulate down just for a little bit, and then we go. So it doesn't have to play out. It may not. But if it does, don't be nervous. Be opportunistic, right? Aside from that, it's the same old song and dance. We've got the gap on the 1 day we want to get into. We need to have these EMAs reversed, though. But at this point, I think we're just going to have earnings, and then they're, it's going to be up. At which point they reverse as a lagging indicator, right? So, aside from that, IV is up today, 29 percentile. We're at 63.2, just 4 days until earnings, right? And so IV is pretty low. The last implied volatility was 63.8, which is crazy because it's literally we're at 63.2. However, 5 days after earnings, it was down to 60, right? So you see it drop a little bit. But then we can see the rest of it, right? So average crush on IV is 13%. Average 30-day volatility 1 day before earnings. So this would be Monday, 120%. That's the average for 12 months. And we're at 60%. So you can see how much volatility has been suppressed. Average IV for the day of earnings, 100, right? So if you can sell those covered calls. What's that, Maya? Said, don't say that word. You're not allowed. Some people do this, so I don't know if I'd really like to this earnings because IV is so low. It's different when we're at 120% than when we're at 60%. You'd want to do that 1 day before, right? 5 days after earnings, average is 85, which is still higher than we're at right now. So to be selling covered calls this earnings and last earnings doesn't necessarily make a whole lot of sense. Well, it makes a few cents. And, we're overestimating 58% of the time, looking for, 15, but we actually get about 16. So it's more volatile than typically we expect or predict it to be, which is great. I could use a little volatility in my life again, right? That's what we've got going on there. As far as the options chain, I'm looking at these puts. They've kind of been an enigma to me a little bit. And I've determined that they're a bit of a triple threat. So, A, you suppress volatility, right? You bring max pain down with it as well, right? You're suppressing the chain. B, it's insurance if the stock price crashes. It's insurance. How did I have that? Okay, so A, it suppresses the chain. B, it is a Vega instrument or an IV tool. So let's say the price of GameStop goes up to 35. The delta on these puts is negligible, so it still receives price improvement because of the change in volatility, right? So even though the price goes up, the contract on the put would go up as well because there's no delta exposure. It's just IV exposure. And when IV on the whole chain goes up, these would be profitable there, which is great. And then, so that's like if we squeeze, right? If we squeeze, these are still going to be profitable through the IV. If we crash, they're profitable just on the puts, right? Like if we go down to 15 or 10, God forbid, these will just be profitable, right? And then C, they're suppressing volatility on the chain. So they're like, I think that's why they're so popular, is because they don't really lose, right? GameStop squeezes, you win. You suppress the chain, which you want to do because you're accumulating, because you're an institution. And C, if GameStop squeezes, you win. So if it squeezes, you win. If it crashes, you win. And then B, you're basically helping pin the price to load up. That's what I'm coming with here. Insurance against a long bet, right? Like this could be the same person buying these 30s and 60s that buys these 5s, and it's just a hedge to the bet, right? But it's like a very good hedge because of those reasons I just listed, right? So that's what I've determined there. Going through the whole chain, there's like a lot listed here. Specifically further dated, like the 2027s, just massive walls here at 30, like a lot. Like the open interest here is nearing 30K, 25K, and it's so far out, right, that there's a good chance that we can get above this, and this will be our new floor. And then further out, there's like some lottos, but not too inappropriate because there's so much time. They'll be expensive, right? You probably don't want to hold these the entirety of the way, but these 30s are interesting. And, even January 27s is like got so many 35s, like 40,000 35s. And then the 30s, the 27s, the 25s, the 20s, right? And then even on the top end, like there's so much here. Um, and then with these puts, which can be shed, like so so the puts are pinning the price until they get shed. And if we do rip to 30, right? Say we have good earnings, we fill the gap. They're going to close these puts on the Vega spike, right? On the IV, because now they're profitable. Now they know they don't need them as a hedge because they've seen price improvement on their long leg of the play. So they get rid of them, and then we go even more, right? Because that downwards pressure has been relieved. So this is really interesting. I was a little nervous about it, but very interesting. I'm more curious, and we'll still need to kind of dive into these 50 puts. Now that is strange, and that's like quite a bit of volume today, right? These I think I've basically got solved. This is interesting though. And just that this is just what I go through it every day, look at it, and when something is interesting, dive into it, see if you can put an explanation to it. Yeah, 25 and 30 just has so much open interest, a little bit out at 45, but it's what's in the money and what's just out of the money that matters. And there's so much at this 23 25 mark that all it's going to take is a volumetric event, good earnings to send us up above it. And there's just so much weight there that if we get there, it's going to be hard to get rid of it, right? Unless people fold, right? It still depends a lot on the contract holders, right? Whether they're rolling out, right, and maintaining that upwards pressure on the chain, or they're just kind of fold, take their profits, and want to play next cycle, that's totally fine. Anyways, so this week is over. These people got cooked, right? 22.67. So the 22.5s were okay, right? That's exactly where we figured we'd kind of stop, right? Which is max pain. So this side loses, this side loses. These people break even. It's not great. The 12th though, some puts building in, which I like, but it's basically dwarfed by the call side. Like the open interest is so much higher than the put side. So again, just so much at 25, so much at 30. Like we don't often have volume on the chain like this. Like this is a lot of contracts on the 12th, on the 19th, all at 25, all at 30, just out of the money, right? Furthermore, October has got a bunch as well, and then January has like the most, I guess, right? And we're not far from putting all of these out of the money contracts in the money, and that is a big deal. That's going to take us from like a this 0.58 or 6 to like a 0.3. Be very bullish. So it could be the start of something special, right? Where we're waiting, but I think if earnings kicks in, we have ourselves a serious ramp into 2027, like a long-term ramp that people will be able to roll out, roll out, roll up, roll out, roll up, and we can just walk it. I would love that. I could be terribly wrong. Maybe we see price suppression for another quarter while institutions continue to load up. Maybe this price suppression never ends. Actually, no, it definitely, I think, would. Because then we could just do a buyback with bond money, right? Which is kind of like the prisoner's dilemma because the bonds were sold at like 30 or 32 or something crazy, right? So, um, you wouldn't expect us to stay below that into the expiry of those, right? Um, that would be crazy. That would just be free money for us. But um, that's kind of how this whole thing works is free money for us, right? So take it day by day. Just try to siphon out those hedgy tiers as much as you can throughout the cycles. Um, we got burnt here. Honestly, we thought we'd have like just a couple days of that bond arbitrage like we had last time, right? We had like this week of bottom trend line and then back at it. But this time it wasn't a week of bottom trend line and back at it like we kind of were expecting. It's been full 90 days, literally a full quarter of bottom trend line, which is crazy. So just kind of taking it day by day, nothing super new. This weekend, I'm going to try to maybe go through some more indicators. We'll do it like a bonus video or something. Um, let's say if we can get 50 likes on a video here, any video. Let's say this one, it'll be easier that way because the call to actions here. We'll do a live stream on Earnings Able stream all day. Why not? Into the call, and we could maybe talk about it. I don't really have much. It was a boring day. We traded straight sideways. There's nothing new to talk about. People loading up some more options. I bought some options today. I said I was going to yesterday, and I definitely did. I think I'm up to about 30 contracts so far. I do buy quite a few, but I also scale out. I'm not holding the entirety of that 30. We'll bleed them off as we go. Confirming profits, making sure that we're not losing money if something bad happens, right? Because, for example, bond offerings happen after hours, and if you're holding your contracts, you can't sell those until market open the next day, and they're going to be cooked. Well done. So, always just bleeding them off, and just when I give my buy callouts, I'll give my sell callouts as well. I give my percentages. I don't like to do specific prices. It gets kind of weird. Like that to keep it private. But percentages, I'm super happy with. Everybody's got a different size portfolio, right? So, I don't want to flex on anyone or make anyone feel bad for me. It could be the other way, right? So, I just talk percentages, and then we can all learn that way and be equals, right? So, cheers. I'll see you soon in the next. Take care of yourselves.